Okay, good morning, everybody. Today we're going to talk about tax tables, worksheets, and schedules. The power to tax is the power to destroy, a quote from Chief Justice John Marshall of the Supreme Court. What are property taxes? Property taxes are taxes assessed on the value of real property. So this would be things like houses, commercial buildings, etc. Okay, so that's one kind of tax. This is generally the tax that covers state and county services like schools. Okay, schools are paid for in Oregon through property taxes. Okay, income taxes are just that. Taxes assessed on income that you earn. Now, there's different kinds of income that are taxed differently. And we have what's called a progressive tax system. So the more money you make, the more taxes you make or you pay. Generally, people that are in the bottom 50% of income tend to pay no taxes. People in the top 1% pay about 40% of the taxes. Okay, so the more income you make, the more your income is taxed. And then there's different types of income. So you've got income from pay, that's usually taxed the heaviest. And then you have like capital gains taxes. So that's where you buy something and then you turn around and sell it for a higher price. That's called a capital gains. Usually pay less money on those taxes than you do on income because that money has already been taxed once. Okay, sales taxes. We don't have one of those in Oregon, but most states do. So a sales tax, let's choose, there we go, is a tax assessed when you purchase something. Okay, so groceries, you buy groceries, you get a tax on that. You buy a car, there's a tax on that. Some states, they don't charge you on grocery or medicine, but they do on everything else. You can even have a sales transfer tax on a house. There are some places that have those. Sometimes this is also called a VAT tax or a value-added tax. Europe is really big on value-added taxes. Basically, their value-added tax is 21% on everything you purchase. Food, vehicles, clothes, everything. Furniture. Okay, so those are some of the different kinds of taxes you might see. What are taxes used for? Okay, so probably number one is schools. Next would be fire departments, police departments, what else might you have tax money spent for? Sometimes it's spent for parks. So you have a state park, that pays for that partially. There's lots and lots of different things that states spend their money on. Okay, list a couple ways that tax dollars have been used to benefit your life. Well, you do get to go to school. All right, so you get to go to school for free. All right, another thing is roads. Okay, you can also list on here a bunch of things. Courts are funded by tax dollars. So I don't know if that benefits you, but roads definitely benefit you. Okay, list a couple ways that tax dollars have been squandered or wasted. There's lots of things there. Oftentimes there are studies done that seem to be useless. Now, not all studies are useless, but there's definitely some of them that are. So we'll just say not all are wasteful. Sometimes their money is wasted on fraud. Okay, a lot of people like to defraud the government. Okay, so you got to watch out for that. That's why generally when you apply for some kind of government program, it has lots of different restrictions and rules on it. And the government generally gets to come in and check everything out to make sure that there's not fraud waste. Okay, federal taxes are collected by the IRS, the Internal Revenue Service. You report your taxable income on a tax return, which is called the Form 1040. They used to have some other different types of forms, but I think pretty much now they've streamlined it all into the 1040. You must choose a filing status on your tax return, so your choices are single, unmarried taxpayer, married filing jointly. That's a married couple that they file one tax return for the both of them. Married filing separately, so that would be if you were married and you and your spouse each filed separate tax returns. And head of household is a special filing taxes that's for certain unmarried taxpayers who support people in addition to themselves. Okay, so that could be that, maybe you have an adult child that's handicapped in some way, and so they might have income, but they might not be able to support themselves completely. And so you kind of combine incomes there. Anyway, I don't know a whole lot about head of household because I never had to file that before. So these different filing statuses have different tax deductions, exemptions, etc. So yeah, filing under the wrong status can cost you a great deal of money. Okay. Generally, people who are very wealthy and can hire tax accountants will find ways, the tax accountant will find the optimal way so that you pay the least amount of taxes, because frankly, nobody wants to pay taxes. Okay, so Ron is single. After completing the IRS tax forms, he calculates his taxable income to be $51,482. The instructions tell him to use the tax table to determine his taxes. How much does Ron owe in taxes? Okay, so this is a tax table right here. Okay, it tells you, line 43 of your taxable income is, and then you have the four columns. You are single, married jointly, or single. You're married and filing jointly. You're married and filing separately, and you're head of household. Okay, so we look here at the problem. He's single, and he made $51,482. So you go down here. And that's between $51,450 and $51,500. Okay, so you go over to the single category, which would be right here. And that's how much he has to pay in taxes, $9,213. Okay. Now, most people have had deductions all along during the year from their pay. You see that line on there, federal income tax, okay? And so what you would do is you'd see, okay, how much was taken out of his check in taxes? And if it's less than this amount, then he's got to pay the difference. And if it's more than this amount, then he'll get a refund for that. Okay, so then Jenny is married but files separately from her spouse. I think this is supposed to say not Bella, but Jenny. Okay. If Jenny calculates her taxable income at $51,784, how much would she owe in taxes? So she's married and filing separately. That's the third column. So that would be the same as if she was single. So that would be $9,213. Wait, wrong column. 700. Oh, sorry. That would be, let's do this in blue. 7,174. That would be this column right here. $9,288. Okay. Hermione qualifies for and files as head of household and sees that she must pay $7,869 in taxes. Write her income range as a compound inequality. Okay, so here's what you're going to do is you're going to go to head of household column, and you're going to find $7,869. That's going to be right here. So then you're going to go over here. She made between $51,200 and $51,250. So you're going to write it like this. $51,200 is less than her taxes, which or her income, which is less than $51,500. And let's see. At least, but less than. So it's at least this. So we're going to have an equal sign here. A less than or equals to sign. Because if you hit 51,200, you're in there. If you're at 51,199, then you'd pay less. Okay. All right. Scabbers is married and files separately from his wife. After learning he must pay $9,275 in taxes, write his income range as a compound inequality. So, 9,275, married and separately from his wife. Let's see, that's this column, 9,275. That would be right there. So his income range would be between 51,700 is less than or equal to X is less than $51,750. Okay, that's how you use a tax table. So Maria and Don are married taxpayers filing a joint return. Their combined taxable income is $153,000. Got one too many zeros here, folks. Nope. Let's do this. Okay, try it again. $153,900. Use a tax schedule below for married taxpayers filing jointly to calculate Maria and Don's tax. Okay, so when you start to get up here in high incomes, if you look at the tax table back here, it goes by $50 ranges. Well, that's, if you start getting way up there in income, that's going to take you forever to figure out. So what they do is they kind of give you a formula at that point. Okay, so married and filing jointly. This whole chart is for that. So they made $153,900. So that's going to be in this range right here. Okay, so they're between $151,200 and $230,450. So here's what they're going to pay in tax. They're going to pay $29,387.50 plus 28% of the amount over $151,200. Okay, so what's their tax going to be? Their taxes, so you're going to write down the 29,387.50. Now we got to calculate. That's basically at 151,200. Now we got to figure out the tax for the amount they made over that. So we're going to take 153,900. We're going to subtract the 151,200. That's going to be $2,700. Okay. They have to pay 28% tax on that amount of money in addition to this. So we're going to multiply that by 0.28. So we get out our handy dandy TI-84 plus C Silver Edition graphing calculator. We go 2,700 times 0.28. That's an additional $756. Okay, that's going to go right here. And we're going to add that up. Okay, so we're going to add to that 29,387.5, and we get a total of $30,143.50. And there's our total tax. Okay, so it tells you you're going to pay this much tax plus 28% of anything above that number, right, or above this number right here, which is the bottom one there. Okay, using the tax table above, calculate the total tax of a married couple must pay if their taxable income is $244,895. Okay, so that would fall in this category right here. So they're going to pay $51,577.50. Plus, they're going to pay 33% of anything over $230,450. So we're going to calculate that. All right, so that's going to be $244,895 minus $230,450. So that's going to be what? 45.4. So it's $14,445. So we got to multiply that by 33%, 0.33. So that comes out to an additional $4,766.85, which we're going to add up right here. Okay, so plus 51,577.5. Oops. Got one too many sevens in there. So the total tax then is going to be $56,344.35. Okay, and this is just federal taxes, keep in mind. So this person would be paying 33%, that's a third of their income to the federal taxes. If you live in Oregon, they're going to pay another 12% on top of that. So that'd be 45%. If they own a business and they're inside Metro, they're going to pay a 1% tax to TriMet. So there's a lot of taxes. I mean, they're going to get about half their income. Okay, so the IRS includes a tax schedule for information purposes only. For taxable incomes over $100,000, taxpayers must use a tax worksheet. So here's a portion of the worksheet for married taxpayers filing jointly. So we're going to calculate Maria and Don's tax using the Schedule B worksheet from example 5. Okay. So they made $153,900. So we're going to write that down right here. $153,900. Okay. So let's see. So the taxable income is at least 100,000, but not over 151,000. So this, we're not going to use this line because this income doesn't fall in there. But it does fall into this range right here. So we're going to enter this amount, 153,900. Okay, then it tells you multiply by 28%. Okay, so 153,900 times 20.28. So this is $43,092. And then, so then we're going to subtract 12,948.50. It says subtract D from C, so we're going to subtract this from this. So minus 12,948.5. And we get $30,143.50. Okay, and so there's their income, or there's their tax that they're responsible for. Now, if you're self-employed, so like your employer always takes out taxes from your paycheck, but if you're self-employed, you don't get a paycheck like everybody else does. So, or in most cases you don't. So you have to pay quarterly taxes. So you kind of have to be careful because you've got a reserve income till the end of each quarter. So you pay the first quarter March 15th, and then you pay the second quarter June 15th. And then I think it's September 15th for the third quarter. And then you're supposed to make a payment in December or January 15th for the fourth quarter. And then you have to file your taxes again in April. So you got to reserve money for that. Keep it aside, not spend it to make sure that you can pay your taxes. And what's really bad is if the start of your year you have really kind of a bad year, and then you make a lot of money in the fourth quarter because you're going to pay a lot more tax, but they consider it late, even though you didn't have that money in the first quarter. So you sometimes have to pay penalties on that. So watch out. Okay, you're going to do pages 4 and 5 of your packet now. Now, I don't have that printed on here yet, but I will throw this on before I send that to you. So I will see you next time, and have a great day.